I am going to do a quick run through of our protection review. So when we are looking at a client's protection and we're reviewing all the areas, this is what we present to the client. So I'm going to try and do it obviously as quick as I can. So I've just used my mum and dad's name just as a random. I don't think they'd mind. So obviously this was done by me. There's a really cringy picture of me there. So all the research, we do all of it on the day of the meeting, because sometimes the quotes can take, they're usually valid for about 10 days. Sometimes they can be longer, sometimes they can be less. So we like to do it as kind of updated as possible. And we do all of the premiums based on standard terms. So when we submit an application, the provider will look at it, and we are just assuming at this point in time that they were going to say yes with no problems. So we always look at what they have first, what they've already got. So when they are employed, we look at their employer benefits. So we look at the two areas, the death in service and the sick pay. So I have found out that my mum gets 5 times death in service, and sick pay, she gets 6 months full. Whereas my dad, he gets nothing. So he gets no sick pay and he gets statutory sick pay only. So we assess what they need based on what they already get from work. And we also look at their existing insurance policies. So they have a joint life cover. It's got 8 years left and it's got 80,000 sum assured on, and it's £10 a month. That's what they've got at the moment. So again, we look at what they've already got, if we can retain anything, or if we think that it's better to replace it. So we look at 4 areas: income protection, critical illness, death, and home insurance. And we always start with a little risk reality calculation. So this is from a provider called Liverpool Victoria, and this is based on your age, gender, smoking status, and anticipated retirement age. We put it all in their system, and it basically gives you a calculation based on the clients that they've had that match the exact profile of my client and the claims that they've had from those people. So I've done this based on my mum and dad both being 40. They're not, but I'll just do it for this purpose, both the same age. I've done it based on my mum being a non-smoker and my dad being a smoker, and both having a retirement age of 70. So I've just done it so you can see the differences. So the top one is being unable to work for 2 months or more. So they're kind of roughly the same. But then you can see that the percentage difference for a serious illness is nearly double from my dad to my mum. And that will mostly be based on him being a smoker. Same for chances of death. And then overall has got a 10% of any of the above happening. So we just kind of give that as a visual, because a lot of people say, you know, it's not going to happen to me, but it does happen to you. And this is based on real statistics from a provider. So we always like to throw that in. So we start with income protection. We think this is so important. So we explain that income protection pays you a monthly benefit if you're unable to work. It's your own personal sick pay policy. It's payable until you get better, until your retirement age, or until you die, whichever one comes first. You can claim unlimited times. And just to note that statutory sick pay is only £109 per week, and it's only payable for 6 months. So it doesn't last forever, and it's not a lot of money either. So how we work out how much we think that they need, we look at their total monthly expenditure, which we will have got from the fact find. We base it on how much they get net income each month, and we minus the partner's net monthly from the monthly expenditure. So if my mum was off sick and she was just going off my dad's money each month, she would have a £700 shortfall per month, and vice versa. So we recommend that because there's a shortfall, they both have an income protection policy. So my mum, because she gets 6 months full pay, she doesn't need any sick pay until after those 6 months. So we think that she should have this kicking in after a 6 month deferred period. And we always look at bronze, silver and gold, because we know that, you know, everyone's got a different budget. We know that not everyone can always afford the best of the best. So the bronze pays out for 1 year. So if she was off sick, it would pay out for 1 year. Unfortunately, if she was still off sick beyond that 1 year, it would still stop, but obviously that is better than nothing. Then we've got an age costed, which is a silver, which basically you pay the premium based on your age now, and as you get older each month, it goes up slightly each month, so the premium just goes a little bit extra each month. And then gold is guaranteed premiums, stays the same throughout the term. And this is based on the full expenditure, but obviously if these don't fit within the budget, we can look at looking at essential expenditure only. Some people only do the mortgage payment, so obviously it can be tweaked as and where. And then for my dad, so because he gets no sick pay, he needs a shorter deferred period. So we've done a couple of examples. So we've done 4 weeks, 8 weeks and 13 weeks. So some people might say, on paper, because I don't get any sick pay, I need a 4-week deferred period, but I've actually got some savings that could last me until 13 weeks. So the longer the deferred period, the cheaper that it is. But again, you can see the difference between the premiums because he is a smoker. If you are a smoker, the premiums are more, unfortunately. Then we look at critical illness. So this pays a lump sum when you are diagnosed a critical illness. It can be whatever amount that you want. So we look at 2 main budgets. And we also have a slide for serious illness, which works in the same way. It pays a lump sum if you're diagnosed with serious illness, but this is from a company called Vitality. Theirs is based on severity, so they could do if you are diagnosed with something that's not so serious, they might say, no, you're not going to get a full payout, but you might get a 10% payout. So you're more likely to get a payout, and you can claim more than once as well. So we look at 12 months expenditure as a lump sum first. So we've got the critical illness and the serious illness. And again, a bronze, silver and gold, a more kind of core plan to an upgraded to a comprehensive. So the ranges of illnesses that it covers. And again, you can see the difference that the smoker rates have on that one as well. And then we do for the full mortgage amount. So they're taking out a full mortgage of 120. So this would pay out if you were to die or if you were to be diagnosed with serious illness. So this has both the life cover and the critical illness elements in. So again, just for budget, we look at the different parts. Then we look at life cover. So this pays a lump sum if you were to die. So we always base it on the full mortgage amount. So they're taking out a new mortgage of 120,000 for 13 years. So their current policy is only 80,000 and it's 8 years. So it's not long enough and it's not enough. And I've already asked the provider if it can be amended and it can't. So we recommend a replacement in this situation. We also have family protection as well. So the clients that have got children, this pays out upon death, but it pays a monthly benefit. So it gives the surviving partner more budget to, obviously, with the essential expenditure to look after the children. So we look at different options. You can have single plans or joint plans, and then you can do it. Some people want it until the child goes to school. Some people want it until they can go to high school, but we could look at the different ages as well. And home insurance, lastly, obviously it's mandatory to have buildings insurance when you've got a mortgage. So we look at 5-star de facto rated providers, and that was the cheapest for them based on that as well. And again, we've got additional features we can look at. And then we've got some optional extras that we can add to some of the plans. So child critical illness, people go crazy for this. They obviously would never want anything to happen to their child. So we love talking about this to the clients that have got children. Global treatment cover gives you access to latest treatments all around the world. So if you had a specific type of cancer and you needed to go to Singapore, that was the only place that you could have treatment. This can pay for you to your travel, accommodation, and the treatment costs up to £2 million to go and get that best treatment for you. And it does include your children on that one as well if they're diagnosed. We've got fracture cover. So if you, break a bone, and then there's some products that include dislocation, ligament tears, and tendon ruptures as well. You could get a payout. So if you broke your wrist, you can have £2,000. This is just an example of Aviva's, but every providers are different. We've got private diagnostics. So if you are referred for anything to do with cancer, your heart or your brain, you can get a speedy diagnosis within 21 days, because sometimes it can take longer with the NHS waiting times and things like that. So it just kind of gives you a better peace of mind that you're going to get a diagnosis if one's needed quicker. Health and wellbeing services. A lot of providers offer this as standard, so they can give you 24/7 GP appointments and things like that. So if that's something that's of interest, then we can make sure we go to a provider that offer that. So once we've gone through all that, it's obviously a very information overload at that point to the client. So we send them the information and we let them go away, look at the presentation. We have a call with them so they can finalise what their monthly budget is and what their priority is. So they might say, my priority is income protection and child's critical illness. So we can look at kind of incorporating those two. And then just going through what happens next. So we get the budget and priority order. I go away, I tailor the providers and the recommendations. I send the recommendation to them. They say they're happy with it. We make the applications needed to the providers, which is like a medical questionnaire, includes your height, weight, medical history, things like that. And then the provider will either accept it at standard terms. So, yeah, no problem. They will accept it at non-standard terms. So they might say, yeah, we're happy to go ahead, but we're going to rate it 25% extra. So that will just boost the premium a little bit because I think it's a little bit risky. Or they could give you an exclusion. So for me, for example, they'll say you're waiting for an operation on your knee. They could either refer it, say, no, we're not looking at you until you've had your operation, or they might say, no, we're not going to pay out if there's, we're going to give you a knee exclusion. So if you have any problems with your knee, we're not going to pay out, or they could decline it. But we've got lots of, obviously, providers we can go to. And what we do is pre-medical research. So before we submit an application and we know someone's got something wrong, we can call the providers and see what they think about the issue before wasting our time with the applications and it being declined. So that's just a really quick run through. I don't know how long that took, but yeah, sorry.
I've got 7 seconds left.
Oh, God.
So well done. That's fantastic. Brilliant. There's my alarm going off now. Brilliant, Carys.
Yeah.
That was fantastic. So much information there, but delivered in a really...
I do it slower, and I do it, we do it slower than that. We do it with more detail, but yeah, that was just a run through of everything that we look at.
What a great overview. I've got a few questions. Anyone else got any questions before me? Keith?
No, I was just giving applause there.
Ah, okay. Oh, it is applause. I thought it was a hand up. That risk reality, that's a bit of an eye-opener, isn't it?
Yeah.
That's a great thing to start with. That really is a great thing to start with.
Them.
Yeah, well, it's the reality. It is the reality. My question that I had, I'm a non-smoker and I've never smoked, but from a vaping versus smoking, how does that impact on the protection then?
If you vape, you are classed as a smoker to them, unfortunately.
Wow.
Yeah. So even if you vape and you don't actually smoke cigarettes, because it's got the nicotine in it, anything with the nicotine, you're classed as a smoker. So you will get those smoker rates, unfortunately, if you do vape.
Wow. Interesting.
Yeah.
Interesting. Cool. And I think my other question is, years ago, critical illness kind of covered everything, didn't it? But now my understanding is that critical illness is quite different, and you've got kind of almost 2 levels of critical illness cover.
With,
One is, go on.
sorry, carry on.
One is more, and it's changed because of the advancements in treatment and healthcare, and some that were included are no longer included, because I know when I was doing a review of mine when we moved here, they were like, just hang on to that, don't change that policy, because you won't get anything like that for anywhere near that premium.
Yeah. Yeah, critical illness was so cheap back in the day, like premium wise. It's not now it's not the cheapest, which is why a lot of people, you know, they might go for income protection and life cover rather, and critical illness will be, you know, kind of last if they can afford it, kind of thing, because it's not cheap. But yeah, as you say, there are some things that were covered on older policies that aren't now, but then kind of the caveat to that is a lot of the cover now covers so many more things. They cover smaller things rather than older ones might have just covered kind of the bigger things. So yeah, you do get what you pay for. The cover, it is brilliant, it is really good cover, but it's good in the sense of there is kind of a more core plan and then an upgraded plan and then a more comprehensive plan. So if your budget isn't, you know, loads, at least you can go for a more core plan, which is better than nothing.